Beautiful. All right, let's go ahead and get started. So, good afternoon, everybody, and welcome to MBA Education and Truve Presents Unlocking Success, the Power of Strategic Partnerships Between Lenders and Vendors. My name is Danielle Jackson, and I'll be facilitating today's session. Just a couple of things to note about the Zoom webinar platform. You can bring up the Q&A box by clicking on the Q&A icon located on the black bar at the bottom of your screen. You may need to wiggle your mouse just a little bit for this bar to appear, but once you click on the icon, a box should pop up, and this is where you can enter in any questions that you have for our panelists during the webinar. You do not have to wait until the end. If you have a question that comes up, please feel free to put it in the Q&A chat the Q&A box, not chat, as soon as it comes to mind. Once the webinar has concluded, we will provide a link to today's recording for your convenience so that you can go back and view it at your own leisure. Also, at the end of the presentation, we will have a short survey, so please make sure you provide your honest feedback of what you thought of today's discussion, as it helps us to improve our future webinar offerings. Now, I'd like to introduce our moderator for today. We have Richard Greaser, I was going to get that right, from Truve. Richard, the floor is all yours, and thank you all for joining us on today.
Danielle, I'm super impressed that you got my last name correct. I mean, everyone butchers that one.
I may have asked someone before we came on, so good.
Good. Danielle, thank you for all you do. Thank you for that introduction. Everybody, welcome. If you came to learn about having a really, really great partnership between your lenders and if you're a lender and you're looking for great best practices for your partnership with vendors, you've come to the right place. And if you're a vendor and you want to learn how to do it, how it's done very well, then we have a really special guest today that I brought on to really help us with that. Actually, sorry about that. Excuse me. There we go. And without further ado, I am going to introduce that special guest. We have Josh Byram, SVP of Technology and Innovation at Prosperity Home Mortgage. Josh, thank you so much for joining us today.
Thank you, Richard. Yeah, I'm from Prosperity, and we are a full-service mortgage banker, primarily a purchase lender, realtor affiliated, doing business in 48 states and the District of Columbia. Thought I'd take that out of the way, Richard.
Well, I appreciate it. I will just take 2 seconds to tell everybody who's listening why this is actually a little bit special for me because, I have a close friend of mine who reached out to me the other day. This was about 2 months ago or 3 months ago, and he sent me a text and he said, "Hey, I think I just used your technology." And I was like, "Well, how was the experience?" And he said, "Oh, it's really easy. It took 2 seconds." And it turns out he used Prosperity to verify his income and employment. And Josh, I'm just really happy. For me, it validates my career and personally when that kind of thing happens. And it was a really great experience. So for me, Prosperity is a very special client, and Josh is super knowledgeable. So I think everybody who's listening today is going to get some really great takeaways in terms of best practices for partnering with vendors and also for their verification of income and employment, specifically implementation, onboarding, success. You're going to hear all about it right now. So without further ado, I'm going to start us off just by setting the table a little bit. You can see in Q1 2024, IMBs were having a real tough time. The average IMB was underwater, about $645 per loan. And recently in Q2, the MBA puts out the statistic that was a little bit better. I think 60% of IMBs roughly were posting a positive $693 per loan. And we've all seen that obviously in September, the rates came down a little bit. Fed did the mortgage service industry and the consumer a service by lowering rates. And so that's a lot of that, I think, is what you're seeing right now with some of the refinance business that's coming in. So, but what, even though that you have that positive news there in terms of like very recent, where rates are going, where production is going, the cost for an average IMB is still very high, actually, and getting higher. And specifically for verification of income and employment, you can see that using traditional providers who will not be named, but you know who they are if you're watching.
We know, Richard. We know who they are.
Yeah, we know.
We pay the bills. We pay that big bill every month. Yeah, we know who they are.
Well, the cost for a verification of income and employment is anywhere between $49 and $123 per pull. And if there's two borrowers, a co-borrower on the application, you can easily reach $492. And, this is up from where it used to be, a couple of years ago, probably 3 or 4 years ago at like $20 per verification. So IMBs are definitely feeling this right now. And what we're talking about today is the experience that Josh has had at Prosperity, working with Truve as a vendor partner to reduce the cost of those verifications by about 80%. Josh, you have anything you want to add there on the cost?
Yeah, I mean, if anybody is not a lender that's on the call, you might think that that $492 number is an exaggeration there. It is not. That is what we're paying for. We're paying $123 for an initial pull for a borrower, then another 123 to re-verify them prior to closing. That's $246. And you have two borrowers, you get to 492. That number is spot on. And I would even say that using a consumer permission platform is 90% less cost. I don't, I
Wow.
don't even think you're giving yourself enough credit there. It's I mean, consumer permission where the customer is getting in through the front door, the borrower is getting in through the front door, rather than having to pay the data aggregators and the data brokers to go to, they're tolling us to go through the back door. The cost is just fractional, and it's usually about 1/10 of the cost is what we see.
Incredible. I've got a couple of people in the chat.
It's not an exaggeration at all. Yep.
Yep. Jared, it's not an exaggeration at all. I'd love to see that. Talking about seeing that at Navy Fed. Love it. All right. So let's keep going. I'm going to start a poll right now. I like to wake everybody up with a poll. Danielle, if you don't mind putting it up there. Sorry, Josh, you're not allowed to answer. And actually, I'm going to ask you
Okay.
not to influence the voters while they're answering. That's the one thing I've learned.
Hands off.
If you start talking about how you feel about it, I know you can literally watch the polls get influenced live, which is kind of cool. But the question here is, where do you think that you have the biggest opportunities to improve your operations? This is your basic loan origination process that I've got up here. You can see from customer acquisition all the way down to post-closing. So I'll give it about 30 more seconds. Yeah, well, I think actually we can call it right now. Danielle, do you mind ending the poll and sharing the results? And while Danielle's doing that, Josh, why don't you answer the question?
So where do we think we have the biggest opportunity to improve our operations? Um, I would say, and there's a lot of choices here, Richard. Um, I mean, honestly, it's really it's first and foremost for us. I don't even know it's on here. It's more so just driving costs down, right? The cost to originate has been creeping up so exponentially over the last couple of years, right? To where, I mean, it was over $13,000. I don't even know what the number got to be honest. But really reducing the cost to originate is the biggest thing for us. That's going to be improving processing times, underwriting times, and then obviously making the customer experience better, so you can keep those customers that when you acquire them obviously a big important thing for us too.
Cool. Well, let's see what other people are saying. Yeah, I mean, you're talking about driving costs down in a big basket, and there's a lot of different pieces here in the loan origination process where you could be driving costs down. We're talking today specifically about verification of income and employment, so that would fall under identity and document verification, and document collection as well. So a few of these different processes, and you can see
And
people are
it,
looking at. Go ahead.
Yeah, and I'm right with them. It impacts processing and underwriting more so in my mind, right? Because you're saving time in processing and underwriting when you're using a verification partner because you're not having to go back for additional documentation for things. So it really streamlines that processing and underwriting. So trying to save time there is very valuable to us.
Very cool. All right. Well, let's keep going. Thank you, everybody, for participating in that poll. And we're going to kick off our first question. Josh, how'd you come to work with Truve? Very straightforward question.
So I actually heard about Truve. It's coming up probably on 3 years ago when it was Citadel. And my boss and I looked at Citadel and had a conversation with them. And it was before any of the conversations had started with the GSEs, about rep and warrant relief and things like that. And we could really see there were good bones there, like the coverage, the amount of payroll systems and employers that it was able to connect to was fantastic. Was very fascinating to us, and intriguing, especially as costs with some of these other verification partners were starting to double every year, and that was the kind of the beginning of that cycle. It was a little too early for us at that time because we are heavily Fannie and Freddie deliverable as far as our portfolio goes. So we really wanted to see rep and warrant relief come into play to really maximize the benefit of the reports. So we waited and waited for Truve to get down the pipeline, and it transitioned to becoming Truve. But yeah, as we saw Truve moving through the pipelines with Fannie and Freddie, that's when we started to re-engage and really talk and try to find the right partner, because there were other partners or other companies going through that same process with Fannie and Freddie, and we really need to find a partner that's right for us, right? Because not everybody is right for us, and I think we'll probably get into that as we go on.
Well, I think that dovetails very nicely into the next question. What were the deciding factors?
So when we're looking for a partner, I mean, when we're looking for a technology provider in our space, we're not just looking for a utility, right? Somebody that has the lowest price necessarily. Obviously, we want a low price, but we're not looking for just a utility that we turn on and it just runs. We want somebody who will listen, learn, and grow with us and evolve with us, because we are willing to go down the rabbit hole and really see and dig into every result, everything that comes back to find what are the missed opportunities. And if we're taking that time to really go dissect everything, we want a partner who's going to take that feedback and grow from it, right? Learn from it, pivot off of it. And in the earliest conversations with Truve, we could tell that Truve was really not just valuing our business, they were valuing our ideas, which
Hmm.
was fantastic. And that's what we look for. We want somebody who just doesn't value our business model, which we have a great business model being purchase focused and realtor affiliated, great business model that's built to survive these types of markets. But more so than that, we want somebody who's going to be a partner and listen and value us from our ideas, right? For our ideas.
I love that. That's a true partnership. And to be quite frank to everybody listening on the call, Josh is one of our best clients. We have we're fortunate to have a lot of really great clients, and a true partnership between a vendor and a lender. The lender is helping the vendor make their product better constantly, and Josh definitely does that. And by the way, it's not all sunshine, unicorns, and rainbows all the time. I definitely want everybody to know that, right? There's definitely real work that happens, and
Yeah.
you hear honest feedback, very blunt, honest feedback from Josh, and I appreciate it. Our team appreciates it. It makes us better. All right, we're going to jump into another poll. Let's wake everybody up again. Danielle, give it a shot. Are you using a consumer permissioned platform now, or are you planning to this year? So you can put in there, yes, I'm planning to, or no. Those are the answers. Oh, actually, you can only put in yes or no. Those are the answers. We have planning in there, but it's just yes or no. Right. Josh, your obvious answer for this is a yes,
Oh
because
yeah.
you're with us. Um, while people are answering this question, I'm just going to ask you, what would you say to folks who are on the fence about using it, or using a consumer permission platform right now? Because you do hear hesitancy when
Yeah.
we talk to people about, well, is the borrower actually going to do this? Would our loan officers get on board with it? These are very common questions to hear. So I just want to hear from your perspective. I know how we answer it, but I'd love to hear from your perspective.
Yeah, and I think people still have PTSD from like when VOA was originally rolled out years and years ago. There was one provider in the space, and it wasn't always easy to get people connected. And there wasn't competition in the space, so the price was very high. It was expensive. But you have a lot of things that have come into play since then. So as we're rolling out, this consumer permission VOIE, you have competition in the space. So you guys have a competitor. So you guys are competing on price. But you also have borrowers who are more familiar with trusting, connecting loans, whether or connecting their accounts, whether it's through Venmo, whether it's through TurboTax or whatever. People are more familiar with doing that now, more comfortable with it, and they do it every day. So I think there's a lot of tailwinds at play here that really make it ripe for people to try to and adopt this, because consumers want it to work. Like borrowers want this to work, and they want to try to make it work. Before, if you'd roll this out 6 years ago, it would be, if they had any trouble at all, they would just skip it and go on. Right. So I think people are more motivated to try and get it to work because they know these things benefit them when they do work.
Yeah. Well, let's take a look at the results. Let's see what we got here. Yes, 79%. So that doesn't shock me at all. I don't know about you, Josh, but I asked
No.
this question at a conference earlier this year, and about 50%, half the room, there's like 20 lenders in the room. About 50% um, said that they were using a consumer permission platform, but 100% said they were going to use one within a year of that time. So, it doesn't surprise me that 79% of the room right now are either using it or planning to use it.
And I would even throw in a follow-up question for the ones who are saying no. Yeah, is the no because you don't have a point of sale that supports it? is the no because you have a LOS that doesn't support it, or you would have to build the integration yourself. Maybe you have a custom LOS, you built your own. It's probably more in the technology side of things is why that's a no, I would guess, rather than because if it was easy as flipping a switch and it was in band or embedded in the online application flow for a borrower, I think most people would say yes. Especially if it's, I mean, because every hit you get with VOIE through Truve or through a consumer permission platform saves you. I mean, it saves you hundreds of dollars from having to waterfall to the other service.
Per
So,
loan. Yeah, for
yeah, I
sure.
think the no's are probably all technology related.
Well, let me
Um,
just ask if anybody who answered no is listening and paying attention, please throw into the chat your reasoning. Please, I'll call it out.
yeah,
We're going to
straighten
move
me
on
out
to
if I'm wrong on that. But
yeah, yeah, we're going to move on to the next question. But I think there were 4 people that answered no, so we'd just like to know what you were thinking when you answered no. Let's keep driving, Josh, on the next question here. So, all right, we're getting into the meat and potatoes here. What did you have to do to roll out Truth? And how was Truth as a partner through the process?
So I'd say our approach to rolling out Truve was we felt like it was just going to be an iteration of what we already do with VOA. We do a lot of VOA. Being a purchase lender, people have to have assets generally, except for certain bond programs and VA loans to buy a home. So assets are always part of the process. So VOA we've been able to adopt broadly and widely and fairly easily, and we've done a lot of work in that space over the years to really drive up adoption of that. So we felt like True would be a natural iteration on that, another consumer permission where the borrower logs into now their payroll system or their HR system to connect. We thought that would be really easy. And this is where True as a partner was fantastic, which True was very transparent in the fact that that's hard, right? It is much harder to get somebody logged into their payroll system and their HR system than it is to get them logged into their bank. And
Hmm.
True was unique in this space from my experience in disclosing that to you on your dashboard in True. You can see from the borrowers who start the process or at least want to do it, and then how many actually convert. And that conversion is what is the term and the metric that we should have been focusing on all along. And True pointing us in that direction not only helped us improve the True rollout and drive conversion, but also helped us improve VOA conversion, right? And really analyze what our partnerships in that space are doing, right? So True pay dividends beyond just being this particular service provider.
I love that. Well, so let's be real here. This next question
Yeah,
is,
here we go.
what was it a success from day one? And talk to me about day one to now. Like, what does that look like in terms of conversion? Because so everybody knows conversion is our North Star. It's the one metric we care about the most. Of the verifications you
Yeah.
send out, how many come successful?
Yeah, I think the advertisements we all see or the white papers we get all talks about coverage, right?
Yeah.
Coverage is the big number. Everybody says, oh, we have 95% coverage, we have 99% coverage, but then ask them about conversion. And uniquely in the VOIE space, regardless of the vendor, it's hard. Conversion in the 20%, the 30% is fairly normal, right? Fairly normal. And so we weren't really familiar with that being that hard in the VIE space, and we felt like it, but couldn't it be that much harder than logging into your bank? But apparently it was. But there were things we could do to help, and there was feedback we could give to Truve, and then there were things we could do to work with the GSCs to maybe help drive conversion. But no, on day one, I was worried. I'll be honest, I was worried because I saw those numbers and I'm like, what are we doing wrong? Did we
Mm.
bet on the wrong horse here? Right? Did we pick the wrong partner? But because they were transparent about us, that allowed us to give them feedback and allowed us to learn and find out how could we message it better? How could we position it better in our flow? How could we drive success there? So no, it absolutely was not a success from day one, but that was where truth shone out as far as the partnership. That's where it immediately came into play to see how is this partnership going to play out. And while it wasn't a success from day one, the partnership grew exponentially from that point on.
Yeah, yeah, and I would say conversion is incredible. The conversion that you guys have is incredible, and looking at the difference from day one to now it shows the work that the two companies have had together to get there. And I think really that's what it takes, right? Because every
Yeah.
lender's tech stack is totally different. And the implementation is totally different. The training that they give their teams is totally different. We can prescribe best practices all day, but every business is unique and different. And so that's why it does take looking and obsessing over that metric. And Josh, that's one of the things I love about you specifically is that you do obsess about those numbers. And you need to. I think anybody even if you're not using Truve and you're using another consumer permission platform or another technology, you should be obsessed about the KPIs that matter. We got a real
I
quick.
saw the question come in, right?
Yeah, you knew that was coming.
Yeah, no. So yeah, the current conversion rate for us is about 42%, which is fantastic. We wanted to, from our goal was to get into the 40s, but getting up to 42% was fantastic for us. I mean, and think about how much that offsets in spend with that other vendor that shall not be named. I mean, it's massive, right? When you have success at that rate for borrowers doing this up front, so you don't have to waterfall to those data aggregators, data brokers, you know, um, three-letter acronyms. Um, so, yeah, it's just been fantastic to get that up to 42%. But on day one, it was probably 21%. Be honest.
Double about 100% in conversion from day one.
Yeah. And it was partnering together through that. There were some things we could do to better message it. And also the more success you get through it, it drives more success because then your loan officers want to help the borrowers or um or convince the borrowers to try harder, right? To try it more and to try and they learn other workarounds or other things they have to do to help get the borrower in. So getting that number, it builds its own momentum, right? As that number starts to rise, it has a positive feedback loop where the loan officers see success and they see, oh my gosh, I got pay stubs and W-2s, I'm done. So it's not just about getting a VOIE that you can run through the GSEs. It's getting, like for any loan, you're getting pay stubs and W-2s right up front. You're done. Like you're done collecting income documentation. And so as soon as loan officers see that working and they're like, I don't have to condition for this, I don't have to ask for anything else, it just breeds its own success.
And other people are wondering what the conversion of the other one that shall not be named conversion is by comparison. So I love people chatting and I love having a live open dialogue like this.
And
It's great.
and I think their coverage, so I think they have a coverage number, which would be somewhere around, and people can correct me if I'm wrong. I think it's somewhere around 35 to 40% because it's primarily using another three-letter acronym
Yeah,
as their data source. So, and I think it gets about 35 to 40% of all employees are covered. U.S.-based employees are covered through that other service, right?
yeah.
That's
So
40% coverage, right?
yeah,
So you have a massive broader coverage with Truth. So coverage with Truth, what's your coverage number,
96,
Richard?
96%.
96%. So if you can convert, and then of that, it's the amount of people that you have that want to try to do it, right? That want to try to link their employment and payroll. And the thing about VOIE that's unique is that it's always good news, right? It's not like linking a VOA. VOA can, especially in a refinance, may not have good news, right? And a borrower would be paranoid about it. Maybe it's not relevant because they're doing a cash out refi. They don't know that. They don't want you to see that they have an overdrawn balance in their VOA. But linking a VOIE is going to show they have income. It's going to show that they're currently employed. It's always good news. So what we found was borrowers want to try this with us at a rate of 85% of all borrowers try to do it. And then if you're
That's
converting 42% of those, oh my gosh, think about the massive offset that is on that other spend.
oh, it's
It's it's
yeah.
hundreds of thousands and eventually millions of dollars, right?
Yeah.
So it's massive.
And with reps and warrants from both GSEs. Well, here's what we're going to do. I want to keep this driving, and I want to make sure we get a chance to wake the audience up. It's one of my favorite things to do because the audience can fall asleep or get distracted. So let's run another poll, Danielle. How would you rate your operations in terms of, and don't feel like you're getting judged here, Josh, along with all the other operations leaders, but how would you rate your operations in terms of efficiency, automation, and process? And we have answers here. I've a fun answer I put up there, like the Terminator. You're just super efficient, all the way down to Fred Flintstone. You're living back in the caveman days. Josh, I'd ask you that question. This one I'm okay with you. You can influence the audience if you like.
Yeah.
How would you rate yourself?
Well, I mean, I think the audience would probably agree. It depends on the product. Depends on who the investor is. Certain bond programs, it's gonna be a while, right? It's gonna take some time. It's not necessarily the most efficient. That's not always the lender's fault. I think now at this stage of the market we're at, where we've all had to go through some attrition, right, and kind of weed out the poor performers. I think we're probably all at either average or above average. I think everybody's comfortably going to say. I think there's certain programs that we're the Terminator on, right? There's certain aspects, especially when they fall in the rep and warrant relief space, we are the Terminator. Like we crush those
Yeah.
as far as efficiency goes. But everywhere else, I would say we're above average, and I'd say most lenders probably feel like they're above average in the other spaces because the the weaker members of the team, the ones who weren't as efficient, had to go because we weren't making money, right? We had to find the most efficient people. So we're all positioned with very knowledgeable, skilled people. So I would say probably above average is where most people are going to wind up.
Yeah, and you do have really good relationships with both of the GSEs in the space, and you work with them very closely. You're actually a great partner. So let's take a look at the results here, Danielle. What are we looking at? Average. Look at that. Everybody's saying, yeah, right in the middle. It's a safe bet, right?
Yeah, I wouldn't think many people would think they're below average at this point because, like, if you're below average now, like, why are those people still there?
It's
You
true.
know, it's been a tough market, right? So I think most of us are average, above average. I think that's fair. I think that's right on.
Absolutely. All right, let's jump into our next question here. Can you share any like rough or specific success stats? This is the part, like we talked briefly about conversion. Maybe you could talk about some of the other ones like cost savings, right? That's a big one.
Yeah.
Uh, Go ahead.
No, I mean that's where I kind of jumped the gun on these stats. It's we had the question come in about conversion and getting that number up to 42% was just massive. Like anything in the 40s for us seems like it's a very significant success. And then rep and warrant was not easy either in the beginning because this was new for the GSEs too, right? And there's been some things we've worked through with both you and the GSEs. Like here's an example of the partnership and working with the product team at Truve and how refreshing it is to work with people who know what they're doing, are capable, competent, and can move quickly to say, oh my gosh, that's right, we're missing that opportunity. Let's iterate quickly. Let's evolve the product. Let's not waste any time. This is about saving money today, right? Delivering a better product today. So, I'm all in on delivering a better product and trying to drive things to the best they can possibly be. And in one specific example I can give you is that when we initially got the True reports, it turns out that one of those three-letter acronyms, where a lot of people's paychecks have their acronym on them, pay stubs, I should say,
Yeah.
limits the amount of data that these credentialed providers, payroll providers, can get to 3 years. Right, only 3 years of data that can Truve get to for that particular data source, which is 35 to 40% of all U.S. employees typically. So Truve being very, to the letter of the law or by the book was like, we don't have a data point there for the start date for their employment because we can't see beyond 3 years. So they would just leave it blank saying, we don't know what date they started. So we're not going to put anything. And I'm like, hold on, hold on. From a lender perspective, we just need to know they've been there at least 2 years. Right. And like, if they've been there at least 2 years, you can see back 3 years and they were still employed 3 years ago. Just say they've been there at least 3 years. That's good enough for us. Like, we just need to know about the last 2 years. I don't need to know that they started in 1987. Like, that doesn't matter, right? I just need to know they started within the last 2 years. And then with the GSEs, they were also kind of clutching their pearls that, oh my gosh, we don't have a start date, right? And then push back on them like, hey, with a VOA, you only have 2 years of history. You're deriving employment income from net income, right? And
Yep.
deriving a gross income number from it. You're deriving employment based upon that, and you only have 2 years of history. Truth can see back 3 years and can tell you they've been there at least 3 years, but then you say, we can't validate employment. Like, so really working with the GSCs to help them see that, hey, this data actually it's a superset of data that you have in the VOA. You have the gross income, you have the net income, you have the deductions, you have everything there. And then you can't let the start date be the disqualifying factor. When we know they've been there at least 3 years, that's all we care about, right? We only need them there 2 years. So that was where we gave feedback to the Truth team. They made changes on the report, was able to take that change to the report quickly to the GSCs and let them kind of learn and assess how they want to analyze that. And there are different stages with that, I think, on either side as far as, and it's more with their credit, credit and risk teams, right? More so than their technology teams.
Well, I think that example, first of all, was an amazing example, I think, between a lender and vendor partnership. And I also think that, they're doing their jobs at the GSEs, right? Like they being risk averse, going slowly,
Mhm.
making sure they do things right is definitely the way they should be going. And I love the fact that with the case that you just presented makes all the logical sense in the world, right? It makes all the logical sense. But getting folks to actually change tech and processes, that's a long, and getting approval and all of that takes a little bit longer, right?
And it really it requires a willingness to go down the rabbit hole, right? From a lender perspective, to take the reports, really dig into them, find out what disqualified them, and to understand how VOA works, how the things like single source validation, direct deposit validation, all those things work with the GSEs, and understanding how they derive that data. So really understanding that, and that's where can be a great partner to a vendor, right? We know how the how the donuts are made in some of these cases, right? How it all comes out in the end. So being able to give you guys feedback, and then you listening and taking that feedback and evolving from it, that's the partnership we wanted. And we're so glad we have you as a partner.
Well, I love it. This was exactly the amount of time we had but allotted for our portion of the webinar. We're right on time here, Josh. If anybody has any questions, now's the time to ask them. Otherwise, we're going to call it. I'm going to tell Josh, thank you so much for getting on here and sharing with everybody your experience. Everybody, just so you know, Josh is, I would say, he's a giver. He likes giving back to the, seriously, to the lending community. And you can see that he's working with us to just make this space better. So if you have questions, feel free to reach out to Josh. He's very proactive. He'll answer. You can find him on LinkedIn, Josh Byram. Sorry, I'm volunteering you up here.
That's fine. No, absolutely.
But I'm impressed with you. And I think if anybody's considering or using a consumer permission platform, I would point them to Josh at any time. Go talk to Josh.
Yeah, and I would say, I don't always paint it very nice for people. Those of you who know me that are out there on this call, I can be very blunt. I can be very harsh, right, on a vendor, and sometimes that's what it takes to get vendors to the right place. So this is not, it doesn't come easy to get this kind of compliment from me. I just want to put it out there, and I think most people who know me on this call know that.
Well, we definitely know that too, Josh. I want to throw that out here. Thank you so much, man. We value you so much as a partner. Thank you, Josh.
Likewise. Thank you, Richard.
Danielle, thanks for having us on.
Yeah,
Thanks, Danielle.
absolutely. Thanks, Josh. Thanks, Richard, for a wonderful discussion on partnerships between lenders and vendors. So before we all start hopping off, I just want to get your honest feedback of what you thought of today's session. So I do have our post-poll evaluation questions up here. In the interim, while you're answering the questions, if you have any questions for Richard or for Josh, you can put them in the chat, and I will also have their contact information in the email that I send over to everyone with the link to this recording so that you can view it again at your own leisure. So speak now or forever hold your peace. And just keep filling out these poll evaluation questions to let us know what you thought of today's discussion. Any parting words, Josh or Richard?
Just thanks for the time. Thanks everybody for joining.
Thanks, everybody. Looking forward to seeing anybody who's going to be there at MBA Annual.
That's the right plug right there, Richard.
That's the way to close it. Good job.
Danielle, I got you.
All right. Thanks, everybody. Enjoy the rest of your day.
Bye all.
Thanks, y'all.
Bye.